Good morning and welcome to this weekend's edition of Black USA Crypto News. My name's Kamal Hubbard and I'm reporting on behalf of the Black USA News Network. First off, before we get to the news, I'd like to thank the Emmy nominated Donnie Glover, who, with his books and many shows here on Black USA News, has once again invited me to rejoin the family. So I'd like to give a great big shout out to him. And the Donnie Glover Morning Show comes on weekdays every mornings. So be on the lookout for that. Also, the Blackout live from New York with Tajmir. She had an episode this morning. Be sure to go in the archives and check that out. She's broadcasting every Saturday on the East Coast, just a few hours before this show comes on. So she's just talking about everything that's going on in the culture. So definitely worth checking out her show. Also, tomorrow, be sure to check out Michael Haney and his program, 60 Minutes in Black, as well as on Monday, Shared Space with Quita and Chap. They're doing great things out there in Baltimore and trying to house the unhoused out there, which is highly commendable. Highly respect both of them for what they're doing. And of course, taking it back out here to the West Coast, in the Bay, Oakland, the Black Business Roundtable with Mr. Doug Blacksher along with Dr. Ashley. They're talking about everything that's going on here in Oakland, in the Bay Area, and you don't want to miss their shows coming on Thursday evenings. Also, be sure to check out my podcast, Crypto with Kamal. I'm bringing it back. Right now, it's exclusively on YouTube, so check out my YouTube page to catch that. In my last show, I had another conversation with Dr. Paul Viotti of Cal State Chico. He is an associate professor of public administration and as well as a program coordinator out there. We had a fantastic discussion on the overall implications of the global economy facing inflation. And then we got to get into a discussion on crypto winter where we talked about a few strategies, not financial advice, but some strategies that could put you on top in the next bull run. So, really, you need to check those out because it's really valuable information. And really, the basis of all that is do your research now and really position yourself in these down times so you can ride the wave when the market goes up. But we'll tell you all about that. Be sure to catch that on my YouTube channel once again. And also, we have a new episode coming up a little bit later of the Black Blockchain Brunch. And I'm going to be joined with a special guest. You guys don't want to miss it. We're talking about a great project. So stay tuned for that in a little bit after this program. So with that said, allow me to get to the news here. I want to start with our first story, which comes to us from Cointelegraph. And this one is regarding crypto venture capital. And the title of the story is Crypto VCs made $2.6 billion worth of deals in the first quarter of 2023. Valuation trends in the report are mixed, with seed rounds up 33 and 1/3%, and late stage rounds up 209.2% compared with 2022. However, early stage rounds are down 16.7%. So the story goes on. While the crypto space suffers through a bear market, venture capital firms are still making deals in 2023, demonstrating that the space is alive and well despite quote unquote crypto winter. According to PitchBook's crypto report for the first quarter of 2023, crypto companies raised $2.6 billion across 353 investment rounds. While it shows the space is still active, it's evident that it's not as strong as it used to be. The report revealed an 11% increase in quarter-on-quarter deal value and a 12.2 increase in total deals. In addition, the quarter also recorded the lowest amount of capital invested in the space since 2020. So we can see this visualization here on how investment is down and deal activity is down. Definitely worth a look for greater insight. The report also noted that valuation trends have been mixed. Seed rounds are up 33 and one third percent, and late stage rounds are up 209.2% for the quarter compared to the entire year of 2022. However, once again, early stage rounds are down 16.7%. While the report recognizes that the decline may continue, it also identified some positive outlooks for the space. The data shows layer 2 scaling solutions can continue their momentum into 2022. The report cited Blockstream raising $125 million to finance a Bitcoin mining infrastructure, and Scroll, a firm building a zero-knowledge Ethereum virtual machine scaling solution, raising $50 million in a late-stage VC round. Besides scaling solutions, custody solutions provider Ledger and Taurus received sizable investments in 2023. On March 30th, Ledger raised $109 million as demand for self-custody soared. Meanwhile, Taurus raised $65 million in a Series B on February 14th. So this is important because it's good to know that investment in crypto projects continue into 2023 despite the cool off of the markets. However, my question is, how many of these investment opportunities went to Black-led, Black-funded projects? Would love to get to know that information a little bit better. We know it was down bad for Black founders in 2022. VCs have historically not invested in Black founders proportionally. So would love to see that change. How that changes, that's news to me, and I will continue to look for that and keep you guys abreast on how venture capital continues to support this space. And with that, I'd like to move on to my next story here, which is so Elon Musk has chosen a new CEO for Twitter, and it turns out she may be a Dogecoin maximalist. Well, time has yet to tell, but we definitely know that she is following meme coins like Dogecoin and Shiba Inu. The title of the story, going back to that, we decipher what little is known about the crypto views of Linda Yaccarino, Twitter's incoming CEO who follows meme coin personalities. So, on Friday morning, Twitter owner, CEO, formally announced his replacement as CEO, which is NBC Universal's current advertising chief, Linda Yaccarino. I hope I'm pronouncing that right. Yaccarino is a veteran media executive, having spent nearly 12 years at NBC Universal and 12 years before that running advertising for media conglomerate Turner Broadcasting. However, relatively little is known about her views on hot button issues currently front and center for Twitter, including its potential future role of crypto on the social media platform. She may not be a newcomer to crypto, though, particularly to the meme-inspired cryptocurrencies that have long attracted her new employer's enthusiasm. Yaccarino currently follows numerous Dogecoin and Shiba Inu affiliated accounts on Twitter, including the main accounts for both coins. Yaccarino also follows multiple core contributors to the Doge community on Twitter, including co-creator Billy Marcus, Doge designer, the creator of My Doge, a self-custodial Dogecoin wallet, and Sir Doge of the Coin, a prominent Dogecoin evangelist and influencer. However, she is not yet commented publicly on the role Dogecoin and other cryptocurrencies may play on Twitter under her leadership. But her Dogecoin heavy Twitter presence is certainly consistent with Musk's reputation as an avid, if sometimes tongue in cheek, Dogecoin advocate. So we will certainly see how much, once again, meme coins, particularly Dogecoin and Shiba Inu, will play under the new regime of Linda Yaccarino. So what I think I'm more concerned about is, how will, right wing rhetoric continue to play itself out on the platform. Under Musk, there were quite a ramp up of, restoration of right wingers accounts and other formerly banned accounts on Twitter. However, Elon Musk extending an opportunity to Tucker Carlson to have a show on Twitter. We have yet to see how that plays itself out. And especially, the new CEO may have a different view on that, but we will see. We will see. So it's good to have a little bit of new leadership here. And once again, it has yet to play itself out, but I want to share this next story coming to us from Crypto Slate, which talks about the Pepe meme coin. So we're going from Dogecoin, Shiba Inu into Pepe, which last week really took the market by storm. And Pepe's market cap slides below 500 million as community interest shifts. Milady meme coin ladies is enjoying most of the hype as several traders are swapping their Pepe positions for the token. So the hype around Pepe meme coin appears to be dying, with the token trading more than 70% away from its all-time high. During the past week, crypto traders increasingly profited from the meme coin, moving its market cap from a peak of 1.65 billion to less than 500 million within a week. For context, Pepe's market cap declined by roughly 200 million within the last 24 hours, from over 600 million, according to Crypto Slate's data. Meanwhile, the decline has not stopped whales like Machi Big Brother from stockpiling the asset. On-chain sleuth Look On Chain reported that the trader bought 66 billion Pepe coins between May 8th and May 10th. Community shifts its interest to others. However, the decline in Pepe's value does not mean the crypto community's interest in meme coins has waned. On-chain data suggests that other meme coins are being developed, drawing widespread interest from entrepreneurs like Justin Sun and crypto exchanges listing them. The new meme assets like Lady, Sponge, Fork, Turbo, and others are gaining momentum as more traders ape into them. One trader who made a profit of 14.5 million trading Pepe has been buying Turbo and now holds 1.47 billion of the tokens. Well, all I can say about that is, what Pepe showed is that meme coins are actually a place where money can continue to be made here. And also, let me share some other data into Pepe with you right now. It did have a substantial drop, but I want to check some live data here on CoinGecko. It's actually up 48% right now at the time of broadcasting, and its market cap is just under 800 million. So from the printing of that story or publishing of that story to our broadcast now, it's up almost 300 million. And its 24-hour trading volume is just under a billion. So Pepe's not done. I think there are some reservations with Pepe, as it should, when it comes to things like whether or not it is a sign or a symbol of or is a racist meme. That's been going on for quite some time. However, This Pepe is different, or so some may say or want to think. It's on a different blockchain, but that criticism is there, and it has not been properly debunked in my eyes. But once again, the important story here is that meme coins right now for the last 2 weeks have been profitable. So if you deal in meme coins or play in meme coins, do your research on those, and it might be a way to make money. However, if you are new to the space and you're not familiar with meme coins, really, really do your due diligence on those. They really have no value. They have no utility, and you can lose your money very quickly, hoping that Dogecoin will go to $1. So, folks, let's go on to the next story here that I want to share with you. And it is coming to us from Cointelegraph, and good old Ron DeSantis dipping his toe in crypto here. And he has signed a CBDC bill into law restricting some uses of US and foreign CBDCs. So the new law signed by Governor Ron DeSantis urges other states to take action against the potential introduction of CBDCs through their commercial codes. Florida Governor Ron DeSantis signed a bill restricting the use of central bank digital currencies in the state, according to local news sources. The governor urged state lawmakers in March to draft the bill. The new law prohibits the use of a United States federal CBDC as money within Florida's Uniform Commercial Code. It also bans the use of CBDCs issued by foreign governments and calls on other states to use their commercial codes to institute similar prohibitions. At the signing ceremony of the bill, DeSantis said he was spurred into action by U.S. President Joe Biden's administration's studies of the new financial technology. The United States does not have a CBDC, and there are no current plans to introduce one. DeSantis goes on to say, I don't think they would have done that if they don't intend on implementing this. He said, "We're a U.S. CB, we're a, were a U.S. CBDC issued, it would be a massive transfer of power from consumers to a central authority." DeSantis also saw a potential introduction of a CBDC as a threat to cryptocurrency. Quote, I think they want to crowd out and eliminate other types of digital assets like cryptocurrency because they can't control that. So they don't like that. The bill the governor signed introduced changes to the state's current commercial code. He goes on to say, you started to have a movement among the states to actually add CBDC to their uniform commercial codes. And this is something that was pushed by a lot of powers that be to do that, he said. In an apparent reference to the proposed Article 12 of the UCC, now before state legislatures, DeSantis added, we looked at that and said, we're not going to add central bank digital currencies to our commercial code. But we also said we need to add protections for Floridians against this. And we'll put in the uniform commercial code that CBDC is something we don't recognize. So you can find more on that story once again on Cointelegraph. But I think it's important. Now we're starting to see states take positions on digital currencies. Florida is staunchly opposed to CBDCs, and obviously they're writing that into law. Currently they are pro crypto. And then we have states like Texas that have written Bitcoin into their Bill of Rights. So in a way, these are good because these states are saying that they don't want to stifle innovation within their states. Obviously, the federal government can take a different position, but these two states in particular, and I mean, I guess we can throw in Wyoming as well, are really being permissive when it comes to blockchain and other cryptocurrencies, as well as Bitcoin, of course, taking a part in their attraction of Web3 companies and making it a very friendly environment within their states to allow those companies to innovate. So now I want to go to the next story here, which is also very interesting, which is Bitcoin DCA strategy from all-time high would have generated profit beating the S&P 500. So a daily $10 DCA strategy into Bitcoin since November 2021 has outperformed the S&P 500. So you might be asking, what is DCA? DCA is what's called dollar cost averaging, where an investor puts in a fixed amount of dollars into an investment on a regular interval. So the story goes on. As Bitcoin has experienced a 75% drop from its all time high, investors have been searching for a profitable strategy amidst the uncertainty. Glassnode data offers an insightful approach, revealing that a $10 daily investment in Bitcoin has led to an unexpected positive return since its peak. This method has even outperformed the S&P 500, which has dropped 13% since November. But what's the secret behind the strategy's success, and how does it compare to the S&P 500? Well, that's a good question. I will allow you guys to follow up on that news story. But what is important is a dollar cost averaging strategy into Bitcoin and possibly Ethereum, uh, could be very profitable for the long run. Now, do you have to do a daily amount of $10? No. You could do a daily amount of $5 or a daily amount of $1. And over the long run, what they're saying is it can beat other markets and it can come out profitable. So you have to do your own research on that. Now, that was a Glassnode report. So feel free to follow up on that and do some further research and study and come to your own conclusions. And once again, you don't have to DCA or dollar cost average at $10. You don't have to do it daily. You could do it weekly. You could do it bi-weekly. You could do it monthly. But what dollar cost averaging allows you to do is to get into a routine of steady and consistent investment into Bitcoin and other cryptocurrencies. Now, I think Bitcoin in particular might be the best one, just since it is the number one cryptocurrency by uh, the cryptocurrency market capitalization. Like I said, I would consider Ethereum in that as well. But let me move on to the next story, which comes to us from Decrypt, and it is also about Ethereum. The Ethereum network suffers finality issues, and here's what that means. Ethereum has suffered a potentially serious technical issue for the second straight day, prompting confusion among crypto users. So, Ethereum, the world's second largest blockchain cryptocurrency, or by cryptocurrency market capitalization, suffered a technical issue on Friday, causing its network to halt finalizing blocks for more than an hour. Finality takes roughly 15 minutes and refers to the guarantee that a block cannot be altered or removed from the blockchain without burning at least 33% of the total staked Ethereum, according to the Ethereum Foundation. The network lost finality for roughly an hour midday Friday in what appears to be the second issue of its kind in 24 hours. On Thursday, blocks were being proposed but not validated during a 25-minute window on Thursday. The cause of these outages still remains unclear, which has spurred many in the crypto community to take to social media to discuss and try to figure out what went wrong. Prominent venture capitalist and Ethereum supporter Adam Cochran tweeted out, F Beacon chain finality has now failed for over an hour. We're at inactivity leak time, and there's no denying that this is now a live a liveness fault. Hoping that this is just an implementation issue for a single client to fix and not a larger protocol issue. Either way, not good. Others, however, are not so concerned. Ethereum core developer Eric Connor said on Twitter that the network did not go down, but rather there was a bug in some clients that has already been fixed. The finality issue, regardless of its origin or duration, remains controversial. Despite transactions appearing to process, the fact that they did not get finalized can mean that they can potentially be reordered or simply ignored. Pseudonymous Ethereum builder Superfizz tweeted a contradictory warning claiming that the second wave was over, but for users to expect a third. But do not worry too much, he said. As bad as this looks, the chain keeps going and eventually finalizes. So, this really speaks to the blockchain trilemma that the recent Ethereum upgrade looked to address. Now, the blockchain trilemma encompasses security, scalability, and uh, transparency. That was a quick quiz, but yeah, I remember all three of those: security, scalability, and uh, gosh, transparency. Why am I forgetting that? So those three things, but this falls on the scalability issue of the Ethereum blockchain. And if it can't finalize its blocks, then it can't scale to the needs of its users. And this has been a big question. Once again, we had this major upgrade of the Ethereum network to proof of stake, and all these issues were really supposed to be cured, right? The Ethereum blockchain was to move much quicker, much smoother, all with remaining as secure or more secure. And gosh, why is this word getting me? Transparent as ever. So, gosh, guys, here I'm getting stumped, and that must mean that it's time for me to go. So, be sure to catch me in a few minutes here, I'm going to take a break for about an hour or so, but I'll be back with the blockchain brunch here on Black USA News. Thanks for joining this broadcast, and catch us next week for more news and insight into the crypto sphere. Thanks so much.